dipped on weaker forecasts in Japanese corporate earnings over worries about weak global growth. US shares look set for a recovery after the previous session's bruising sell-off, with all the major stock futures pointing higher. The tech-heavy Nasdaq is gaining the most ahead of the opening bell, while the Dow is also looking to recover from its brutal 500-point loss, which erased all of its gains for the year. And oil prices are making a comeback after the previous session's 6% plunge. They're being boosted by the American Petroleum Institute's latest report of an unexpected decline in US crude inventories, which is easing concerns over a growing supply glut. Well, for more on the market's reaction, Michael Ingram joins me now from London. He's a Chief Market Strategist at WHIreland. Good to have you back on the program. So it looks like Wall Street is in for a bit of a recovery after that brutal two-day sell-off. Tell us, why are tech stocks bearing the brunt?
Well, Oscar, I mean, part of the answer to that is simply because they've come from a very, very high level. We've seen very, very rich valuations. A lot of future growth had been priced into the sector. And against a backdrop where, you know, we're seeing central banks tightening policy, where there are still some big questions out there geopolitically, not least around US-China trade. You know, in this sort of environment, people are going to take some money off the table. And I would remind your viewers that even though, as you say, the retracement in some of these tech stocks has been brutal, actually, if you look at year-to-date performance, actually IT hasn't stacked up that badly against other sectors.
Interesting. So do you think that we've seen the bottom of the tech stock in terms of their value, or could they fall even further?
Well, Oscar, I think it's definitely possible we might see further downside because, you know, I looked at a very recent asset allocation survey of institutional investors, and that suggested, despite the fact that their allocations to global tech had been scaled back massively over recent weeks. I mean, it now seems to be the lowest level we've seen in 9 years. They are still overweight in their funds, so it's quite possible that they're going to take a little bit more out of the sector, you know, going forward.
Okay, and let's take a quick look at Europe, because we've just got news that the European Commission has officially rejected Italy's big spending budget, which really sets the scene for a proper showdown with Rome. How has that uncertainty around Italy's budget been affecting the markets?
Well, certainly the uncertainty around Italy's budget has put specific pressure on Italian bonds. We've seen a significant sell-off over recent weeks and months, and that in turn has put pressure on Italian banks that hold a great deal of these particular instruments. But more broadly, you know, it's an existential crisis for the Eurozone. Yeah, you remember perhaps the convulsions we saw going through the market on the back of Greece a few years ago. Well, you know, at the end of the day, Italy is in the Eurozone and it's potentially a Euro killer. So if we see, you know, trouble in Italy, it spills over into the broader Eurozone, and it's one of the reasons why we've actually seen the Euro itself being particularly weak.
Yes, so I guess all eyes will be on what happens between Brussels and Rome. Michael Ingram in London, thank you again for your time.